Many business owners work hard every day but still struggle to build meaningful savings. Money comes in, bills get paid, unexpected expenses appear, and the bank account never seems to grow. Saving your first $50,000 is not about luck, talent, or having a huge company. It is about building better financial habits, creating systems, and making smarter decisions consistently. In this video, we will explore practical business finance secrets that can help you save your first $50,000 faster, reduce financial stress, and create a stronger foundation for long-term business success. The first secret is understanding exactly where your money goes every month. Many owners know their sales numbers but have very little understanding of their spending patterns. They may check their bank balance occasionally, but they rarely analyze expenses carefully. This creates financial blind spots that quietly drain cash over time. Start reviewing every expense category at least once each month. Look at subscriptions, software tools, advertising costs, office supplies, utilities, travel expenses, and operational spending. Ask yourself whether each expense contributes directly to growth, customer satisfaction, or efficiency. If the answer is no, consider reducing or eliminating it. Small expenses may appear insignificant individually, but together they can represent thousands of dollars each year. Business owners who understand their spending habits gain more control over their finances and make better decisions. The second secret is paying yourself first. Most business owners wait until the end of the month to see if any money remains for savings. Unfortunately, something always demands attention. A supplier invoice arrives, equipment needs replacement, or another expense appears unexpectedly. Instead, treat savings as a mandatory business expense. Decide on a percentage of revenue that automatically moves into a separate savings account. Even a small percentage creates momentum over time. When savings become automatic, you stop depending on motivation or discipline. The system works in the background while you focus on running your business. Consistency matters much more than large contributions made occasionally. The third secret involves separating business money from personal money. Mixing finances creates confusion, inaccurate reporting, and unnecessary stress. It also becomes difficult to understand whether your business is truly profitable. Maintain dedicated accounts for business operations, taxes, emergency reserves, and long-term savings goals. This simple practice provides clarity and helps you make better decisions. When money has a specific purpose, it is less likely to be spent impulsively. You begin treating savings as an important business asset rather than extra cash available for spending. The fourth secret is focusing on profitability instead of revenue. Many owners celebrate increasing sales while ignoring shrinking margins. High revenue does not automatically create wealth. Profit creates wealth. A business generating substantial sales but minimal profits may struggle financially despite appearing successful. Improving profitability often has a greater impact than increasing sales. Look for opportunities to increase pricing strategically, reduce waste, negotiate better supplier agreements, and improve operational efficiency. Small improvements in profit margins can produce meaningful increases in savings over time. The fifth secret is building an emergency fund before pursuing aggressive expansion. Many businesses fail because they operate without financial protection. Unexpected challenges happen in every industry. Customers delay payments, equipment breaks down, economic conditions change, and emergencies occur without warning. Having cash reserves provides stability during difficult periods. Instead of relying on loans or credit cards, you can solve problems using your own resources. Financial security reduces stress and allows you to make decisions from a position of confidence rather than fear. A healthy reserve fund protects the business and supports long-term growth. The sixth secret is improving cash flow management. Profitability is important, but cash flow keeps businesses alive. Companies often fail not because they lack sales, but because money arrives too slowly. Send invoices immediately. Follow up consistently on overdue payments. Encourage early payments through incentives when appropriate. Establish clear payment terms and communicate expectations clearly with customers. The faster money enters your business, the easier it becomes to build savings and maintain financial stability. The seventh secret involves controlling lifestyle inflation. As businesses grow, owners often increase personal spending rapidly. They upgrade vehicles, purchase expensive equipment, move into larger offices, and adopt higher lifestyles. Growth should not automatically mean higher spending. Instead, allow your savings rate to increase as revenue grows. Maintain reasonable spending habits and prioritize financial security. Temporary sacrifices can create permanent advantages. Building savings today provides freedom and flexibility tomorrow. The eighth secret is tracking key financial numbers regularly. Business owners who monitor financial performance consistently tend to save more money because they identify problems earlier. Review your profit margins, operating costs, cash reserves, accounts receivable, and monthly savings progress. Numbers tell stories. They reveal trends, highlight inefficiencies, and expose areas requiring attention. When you understand your numbers, financial decisions become easier and more strategic. The ninth secret is creating multiple income streams. Depending entirely on one source of revenue increases risk significantly. Consider adding complementary products, services, educational resources, consulting opportunities, or recurring revenue models. Diversified income provides additional stability and creates opportunities to accelerate savings. Even modest additional income streams can contribute thousands of dollars annually toward long-term financial goals. The 10th secret is learning to delay gratification. Saving your first $50,000 requires patience. Many business owners seek immediate rewards and overlook long-term benefits. Before making purchases, ask yourself whether the expense supports future growth or simply satisfies a temporary desire. Delaying unnecessary spending allows capital to remain inside the business, where it can generate additional value. Financial discipline compounds over time. The decisions you make today influence your financial position years from now. Another important strategy is setting clear savings milestones. A goal feels more achievable when divided into smaller targets. Instead of focusing only on $50,000, celebrate milestones along the journey. Saving $5,000, then $10,000, then $20,000 creates motivation and momentum. Progress builds confidence. Each milestone represents proof that your systems are working and your financial habits are improving. It is also important to remember that comparison can be dangerous. Many entrepreneurs compare themselves to competitors, social media personalities, or other business owners. Appearances can be misleading. Some businesses generate impressive revenue but carry significant debt. Others may look successful while struggling behind the scenes. Focus on your own financial journey. Measure progress against your previous results rather than someone else's circumstances. Saving money is not about impressing people. It is about creating freedom, reducing stress, and increasing opportunities. Finally, understand that your first $50,000 is more than a number. It represents discipline, better decision-making, improved systems, and stronger financial awareness. It demonstrates that your business can generate wealth, not just activity. Once you save your first $50,000, the next milestone often becomes easier because the habits already exist. You understand your numbers, control spending, manage cash flow effectively, and prioritize long-term stability. Business finance is not about becoming rich overnight. It is about making intelligent decisions repeatedly until those decisions transform your financial future. Start today. Review your expenses, automate savings, improve profitability, protect your cash flow, and commit to consistent action. Your first $50,000 may be closer than you think, and the journey towards saving it can completely change the way you operate your business forever.